has come out with its Q3 numbers. And if you look at the numbers, there is a beat coming in all fronts despite the sharp fall in quarterly numbers. Well, the steelmaker has posted over 60% drop in quarterly profits on a sequential basis. The Q3 PAT fell to 296 crores from 759 crores in last quarter. Revenue fell slightly to 53,648 crores. Meanwhile, the margins also came in lower at 11% versus 11.4% in the last quarter. Well, to get a sense of how the numbers look like, we're joined by Aditya Velikar, Senior Research Analyst, Metals and Auto, Axis Securities. Hi, Aditya. Thank you so much for joining us today. Aditya, first up, how are you reading into the numbers? There is a beat, at least, whatever we were expecting at ET now, that it has beaten our estimates. How are you reading into the numbers?
Yeah, good evening. So, the numbers have beaten even our estimates. We were expecting EBITDA of 4,700 crores and consolidated EBITDA has stood at 5,900 crores. So that's 20% plus beat on EBITDA. So prima facie, the first preliminary impression is that the results are good. Tata Steel India EBITDA has also beaten our expectation. On a sequential basis, there is a 13% increase in Tata Steel India's EBITDA at 7,600 crores. Losses at EBITDA at Europe has narrowed. So EBITDA per ton, if we do some preliminary calculation, at EBITDA per ton at Europe has narrowed to $41 per ton as against $75 per ton in the previous quarter. And EBITDA per ton at Indian operations stood at 14,400 rupees per ton, which is a 10% increase on a sequential basis. On a year-on-year basis, we all know that there is a drop in EBITDA because of the fall in the steel prices. So it's a slightly surprising that Indian and European operations have done well as compared to consensus. Net debt figures are not yet known. So the presentation from the company is not out yet, so we will come to know about that. The beating on the EBITDA is largely reflected in other trade-related operations, which is forex movements. So the fine prints we will come to know once the presentation and from the con call tomorrow. So overall, it's a good set of numbers. The weakness was largely known to the street, but as against consensus, the beat is reflected.
Aditya, also Tata Steel Europe losses have narrowed sequentially. That is something that we were already penciling in. What's the outlook going forward? And tomorrow, how do you expect the street to react to these numbers?
So the street may react positively because consensus EBITDA was slightly more negative than what has come out. So as far as the outlook on Europe is concerned, in the previous call, the management has said that they will try to attain cash flow neutral position for the UK operations by June 2025. So that is the key monitorable going forward when at EBITDA level when the UK operations break even. Also, we would like to know what is their outlook towards the restructuring at UK and then the capex towards the decarbonization at Netherlands operations. So two major capex which are lined up. So the one at Netherlands for decarbonization and UK. So these two things we will like to hear from the management. So of course, the break-even from UK was in the previous call was given. The date was June 2025. So if the management sticks to that, that will be a key monitorable going forward.
All right, Aditya, thank you so much for joining us and weighing in on Tata Steel numbers.